Thank you for joining us for another episode of the Board Chair series hosted by David Beatty and with today's guest, Janet Bannister from Staircase Ventures. The Board Chair series is all about collecting different perspectives and views and vantage points on what it means to be a top quality director. Earlier this year, we've had folks who have led charities from a national and international perspective. We've had top board chairs from the largest Canadian banks. And today we have a top venture capitalist talking about what it's like building building a board from scratch. Thank you for coming, Janet. My name is Quinn Lawson. I help David manage the board chair community. And you all know David as one of the elite international board and corporate governance educators here based in Toronto. So take it away, David, and thanks for everyone for coming.
Yeah, I'm thrilled. Thank you all for showing up. And today's adventure with Janet is a very exciting one because she, I think, stands alone in Canadian private equity venture capital investments. So, Janet, you started at McKinsey as I did 100 years ago. I remember I didn't know the difference between cash flow and profit. Did you at the time you joined?
Well, luckily, I think I was fortunate enough to go to Ivy Business School.
Oh,
So
that
I
did it.
did
Yeah,
know
okay.
a thing or two about that.
Okay, but tell us why you left McKinsey to join eBay and then going on to launch Kijiji back in Canada. So how did that migration occur?
Great. First of all, I'll just say it's awesome to be here today. Welcome, everybody. We're going to have a Q&A at the end. If you have any questions, please jump in. Love to have this as interactive as possible. So to answer your question, David, and by the way, I actually started my career at Procter & Gamble. So I was in Procter &
Oh,
Gamble.
did you? Oh,
Brand
okay.
management.
All right.
Yeah.
Yeah.
And then spent 4 years there as a brand manager and then went to McKinsey. Loved McKinsey, loved the intellectual challenge, the pace of learning, the ability to work on really meaningful projects. But I had always been an entrepreneur at heart. I had, started my first business when I was 15 years old, run businesses through my summers at university. And I had been at McKinsey, was an engagement manager there, and then thought, you know what, I don't think that I want to be at McKinsey forever.
Oh.
And I've learned a ton, and I want to do something more entrepreneurial.
That's great because in my business school classes, I say join McKinsey, Bain, BCG, but only for 2 or 3 years because it's a great finishing school. But if you get stuck in there for a lifetime, then you never run anything.
Well, that's right.
Yeah.
Now, mind you, I have a huge respect for anybody at McKinsey, regardless of how long their tenure was.
Yeah.
People who spend their entire careers there or not. It's a great place. But I was grateful to have learned a lot there and had that as my starting ground. And then, as I said, I decided that I wanted to do something more entrepreneurial.
Mm-hmm.
At this point, it was late 1999. The dot-com bubble was in full swing, and I thought, you know what, I thought I want to learn more about technology. I realized that technology was going to change every business function and every industry. And I thought to myself, Janet, if you want to have a long-term career in business, you need to learn technology. And combining those two different things, I thought I want to join a fast-growing startup company, learn more about entrepreneurship, learn about technology. And where's the best place in the world to do that? Silicon Valley. And I also thought that would be a great learning and growth opportunity for me. So sort of an interesting story, but bottom line is I ended up meeting Meg Whitman at eBay, who was running eBay at the time, and she said, Janet, you should move out to California and join eBay. So that's what I did.
Wow. And what year was that? That was
So when I joined, by the time I got to eBay, it was 2000.
okay. All right. Fabulous. So then what happens? Tell me. You're working in Silicon Valley in one of the great startups, eBay.
It was great. So when I
Yeah.
joined eBay,
Yeah.
about 80 or 90% of the things bought and sold on eBay were collectibles. Like that was eBay's roots.
Didn't know that.
Right?
Okay.
Coins, stamps, things like that. And
Yeah.
I was given responsibility for all the non-collectibles categories and basically told, hey, Janet, see if you can expand the non-collectible side of the business. And, it was just an incredible time to be in Silicon Valley and to be at
Yeah.
eBay. So many things were changing. It was the birth of e-commerce. eBay was growing very quickly. I remember within 6 months, I realized that I had, 6 months I was there, and I realized that I was at the midpoint in terms of tenure. So I like the median. So 50% of the people had been hired since I had joined 6 months ago, which is pretty special. But as I said, great. I mean, I could tell all sorts of stories about that time, but it was an incredible learning opportunity. And I think one of the things that I learned that is still relevant today is understanding the scope of ambition and raising expectations. And so, for instance, I remember one of the people who reported to me was head of the clothing category. And she gave a big presentation to the executives about why more clothing can be traded on eBay and why this was a massive growth opportunity. And she concluded by saying, and we're going to triple the business next year in the clothing category. And Meg Whitman said to her, she said, I was really excited about your presentation until the end when you said you were only going to triple the business.
Yeah,
Why can't
right.
you go faster?
Yeah.
Right. And it's that mentality of
Uh-huh.
why can't we go faster? Like, let's like full steam ahead. And so I really valued that time, and I still maintain relationships with a lot of people who became friends while I was there.
Yeah. And how many hours a week were you working when you were there, would you guess?
Oh, a lot, I think. Oh, maybe 60 hours a week, so not
Okay.
too many.
50% more than quote normal.
Yeah. But I'm not sure if
Wow.
I've ever been
Yeah.
normal. Another great
That's true.
lesson from
Yeah.
McKinsey is that it teaches you how to work hard.
Uh-huh. Okay. So then you decided to come back to Canada, or you were sent back to Canada, and Kijiji emerged. Tell me about that.
So I spent about 4 years living in the valley.
Yeah.
Absolutely
Okay.
loved it. Learned a
Yeah.
ton, met great people, and I'm very thankful for that opportunity. But my husband and I are both from Canada. We wanted to make Canada our long-term home. We wanted to have our family here. And
Hmm.
so I said to eBay, hey, eBay, I'd like to move back to Canada. And they were very supportive. They said, okay, Janet, if that's what you really want to do, we'll support you. We'll find you an opportunity within eBay Canada. So
Hmm.
I said, great. So then they came back to me a couple of days later and they said, okay, Janet, you can move to Canada and you can be the head of product. So responsible for the ebay.ca website.
Yeah.
And I was like, oh, that doesn't sound like too much fun. I had been managing the business I was managing in the US was about
Yeah.
200 million. The Canadian business was a fraction of the size, and I was just responsible for product.
Hmm.
But I thought that's okay. That's my ticket home,
Yeah.
and I will figure out what I want to do once I get there.
Yeah.
And so
Good.
I moved back with eBay to Canada, and the first thing I did was I benchmarked how is Canada doing versus every other country around the world on eBay. And what I realized was, so just for perspective, so this is 2004. Uh,
Okay.
but the percentage of Canadians who are visiting eBay in any month was one of the highest of anywhere in the world. I should say the percentage of online Canadians. So our
Hmm.
penetration was very high. However, the conversion rate from people who came to the website to actually doing anything, to like bidding on an item, buying an item, was half that of every other country in the world. So I was like,
Wow.
oh, this is awesome. We have this great opportunity here to close this gap. And
Yeah.
so I started digging in and doing more research and doing trials on the website and doing some different tests. And what I realized was this was this was a result this the situation was a result of the habits and practices of Canadians. And specifically, again, this is 2004, Canadians were spending a lot of time online. And in fact, if you looked at the data in terms of the online usage per capita, Canada was the second highest country in the world after South Korea.
Wow.
And yet online purchasing was half
Mhm.
that of the US and many other countries. So, in other words, Canadians were going online, they were spending time online, they were researching online, but
Yep.
transacting in person. So I thought, okay, often, again, this is where sort of like your career goes. You learn so much. And I thought, okay,
Right.
I
Yeah.
know like my
Right.
good old P&G experience.
Yeah.
It's very difficult to change fundamental habits. They often change over time. And so I
Yeah.
thought I should develop a model that is better geared towards the habits of Canadian consumers. And so hence came up with the idea of classifieds, because with classifieds, you're researching online, you're transacting in person, besides which classifieds by its nature needs people in the same city. And Canada, even though it's a huge country and a small population, it's one of the most urbanized countries in the world.
Hmm.
So that really was the thinking about behind launching a classified site in Canada.
So tell me what that means. What's a classified site?
So a classified site is like a Kijiji or a Craigslist, who some
Okay.
folks, particularly Americans, will know. It's really It's called classifieds because it's like the classified ads
Yeah.
from the newspaper that are on online. And it's when people go and put an ad online, like I'm selling a sofa, or I'm looking for a roommate, or I'm selling my car, or what have you, or
Yep.
services. They're putting those ads online and then they're finding other people.
Okay.
In some ways, the business is very similar to eBay in that it's primarily consumer to consumers. It's an online site where people go on and post what they're buying or what they're selling. Selling can be like renting an apartment. Um, but in other ways, it's a very different business. eBay, for instance, you transact via by transaction fees
Yeah.
versus a classifieds business. You're primarily monetizing it via advertising.
Yeah. Right. Yeah. Hmm. And so how long were you doing that? And what was the end product when you left?
So we ended up, again, long story short, launching Kijiji, building that business, and then I was running the global Kijiji business, and then I left. I think I was there probably for about 5 or 6 years
Okay.
doing Kijiji.
Mm-hmm. And how did you stumble into real ventures then?
Yes, so
Somebody came
12
and plucked
years.
you out, or you decided I've done this kind of business long enough. I need to do something new.
Well, I left Kijiji. It was interesting. My son was young. He was a
Mhm.
year away from going into kindergarten, and I was working all the time, traveling all over the place. And I just thought, these years you can never get back.
Yeah. Excellent. Yeah.
And so I took 8 months off, and
Ah.
it was a scary decision at the time, but I look back on it and I'm so grateful
Yeah.
that I had the courage to make that decision, to just take time off,
Hmm.
spend time with my son. I mean, I also did a whole bunch of other things. I was a competitive triathlete, so I decided to ramp back up my training. I did a bunch of volunteer work and all sorts of things like that. But it was just a great experience.
Mm.
Then I got back into working. I ran my own consulting business. I was the CEO of a venture-backed company, and then Real Ventures, which is a venture capital firm based in Montreal, which at the time was the most active early stage investor. They contacted me and said, "Hey, we're looking to hire a partner in Toronto." And I had never thought about going into VC. I actually had this perception of venture capital folks as being sort of like the type of people you see on Dragon's Den or Shark Tank,
Right.
being,
Yeah.
you
The
know,
great,
cut.
biggest Ponzi scheme in the history of the world.
I thought, I'm not like mean and nasty to entrepreneurs. I'm not going to get in there and yell and scream at people and um, grind them down so I can
Yeah.
make more money.
Hmm.
But what I realized is actually the most successful venture capital investors build very strong, trusted relationships with the entrepreneurs
Yeah.
and work with them hand in hand to make them successful. And what
Hmm.
I realized was venture capital combined two things that I absolutely loved. One was I loved being in consulting. As I said, spent 4 years at McKinsey, spent 4 years running my own consulting business. I loved working across a wide range of businesses, continually learning, working on some of the most challenging problems, taking learnings from one industry, applying them to the other. I love that. But I also loved entrepreneurship and the fast pace and being the underdog and thinking in creative ways and making do with less budgets and figuring out how to disrupt the incumbents. And so I thought, wow, like this venture capital, this is great. So I got into venture capital about 12 years ago. Absolutely love it.
Oh, that's amazing. Yeah, because the venture capital world have a reputation for being less than stellar with respect to concern with anything else except payoff, right?
Yeah, I don't know. I mean, I think it depends who you talk to.
Okay.
Um, but I do
Yeah.
think the most successful venture capital people, for sure, build strong, trusted relationships
Yeah.
because the very best founders have their choice of who they take money from.
They do
And
today. Yeah, that's right. And I think
yeah,
that's why Omer's decided to specialize. And a lot of these firms are now specializing, aren't they, in niches, so they can add value to the ongoing potential of the startup. Is that? Yeah.
absolutely.
Okay. Okay. So what was Real Ventures focus then?
So Real Ventures was focused on leading pre-seed and seed stage investments
All
across
right.
Canada. And so the team was based in Montreal. I joined as their first partner in Toronto and really was tasked with building out our presence in the Toronto Waterloo ecosystem
Yeah.
and leading investment opportunities.
Okay. So where'd you head though? I mean, what do you do? Day one, you're the new Toronto partner. They've done nothing here. Who do you find? What happened? How do you start?
So what I did was I thought, okay, I don't really know too much about venture capital
Yeah.
and nobody knows me, so I got to get out there and start meeting people. And so what I thought about is I thought, okay, who are the people that the best entrepreneurs go to?
Ah,
And,
right.
right. And so I did everything from, going to places like DMZ, which is associated with TMU, 111, I think it started up, Creative
Yeah.
Destruction Lab. I went down to Waterloo and went to Communitech. So all these different organizations that support young startups. I
Yeah.
also reached out to people I knew and who were successful founders and said, who are the leaders in this industry? Who are people that the founders go to for advice?
Hmm.
Who are the angel investors? Who are the respected people? And then I would go and meet with them. So I just built my network that way. I also thought everybody I want to meet with, I want to leave that meeting with them feeling I'm going to send great entrepreneurs to Janet. And so I was always trying to give back or help them in some way, whether it was, hey, can I introduce you to somebody? Can I introduce you to a potential customer? Are you looking, to hire somebody that I could help you with? So I did that. The other thing that I did was trying to build my own brand and get to know people is I would find out what events were going on. And as soon as I heard that there was an event, I would figure out who was organizing it and I would call them up and I'd say, hey, I'd love to speak on a panel. This is who I am. This is what I've done. Here are the topics that I could speak on. If there's
Hmm.
any openings, I would love to participate. And so that helped me as well.
Great. So how many investments did you make and how long were you with Real Ventures?
So I spent a total of 8 years there and
Did you?
made
Eight, yeah.
22 investments.
Wow. And how many of them paid off, Janet? How many of them are cashed out now?
Oh, that's a good question. So it's a long investment period,
Yeah, 10
right?
years?
And so I
Yeah.
think about 4 or 5.
Okay. So the rest are still carried and still prospering. You picked well out of 22, or what would you say if you did a post-mortem of the good picks, how many of the 22 were really potentially, in fact, uh, good bets?
So I would say, first of all, as I have learned, nothing's over till it's over. Both
Yeah, true. Yeah, okay.
you get surprises on the upside and surprises on the downside,
Yeah,
and
right. Hmm.
nothing counts until you've exited. But I would say about half
Half,
were
eh?
were
That
strong
that's pretty
investments.
good though, eh? I think that's a pretty good ratio. I'm trying to
Yes.
think. Birch Hill's done 80 or 90, and I don't think they'd be much above 20 in terms of real payoffs. And I think what Dave Samuel found out there was that when they did their post-mortems, they found out that they were selling their best picks early to pay out the limited partners. And so his latest funds have been, we're going to stay in these good businesses probably forever, you know.
Yes, yes. Now I think you need that can sometimes probably I would argue that that is maybe different between private equity and venture capital.
Okay. Yep, that may be true. Hmm.
Right, just because the nature of these private equity businesses tend to be more stable versus a lot of venture companies,
Hmm.
even in their year 6 or 7, tend to be more um, variable outcomes
Yeah.
than
Okay.
a traditional private equity type of investment.
All right. So you leave Real Ventures to start Staircase. I was
Yeah.
stunned when that happened. Oh my gosh. What the world doesn't need is another private equity venture capital startup firm. And you've done spectacularly well since you did this. So why did you leave and where did you create? What did you create? Tell us.
Well, I decided that I wanted to leave Real Ventures, start my own venture capital firm. What I realized was that I love investing in great
Yeah.
founders, love working with them, love seeing them be successful.
Yeah.
Um, and I wanted to create a fund where I could really focus on that and focus on doing that as opposed to, necessarily managing a big firm. I also had some ideas around how we could structure the firm.
Mhm.
And so maybe I'll sort of go into that. There's three key differentiators that
All right.
Staircase Ventures has. And
Yeah.
the it all starts with the belief that, and so we are investing, just to back up, what we are doing is we are investing typically $1 to $2.5 million into an early stage technology company for 10 to 15% ownership. Typically, these teams would have somewhere between 10 and 15 employees with a product in market, initial product market fit, and revenue around $1 million. Sometimes it can be pre-revenue, sometimes it can be more than that. But that's sort of the basic uh, type of company that we invest in. We invest in software only, so not hardware, and business to business, focus businesses.
Oh, okay.
So in terms of, as I said, that's sort of just to sort of lay the sort of
Yeah.
groundwork. So in terms of what we do is we believe that founders are the most important success factor for an early stage technology company. And what's interesting is if you talk to most early stage investors, they will nod their head and say, yep, that's right. However, very few venture capital firms actually invest into the founders after they make their investment. And specifically, what I mean by that is investors focus on, hey, how do they add value? To your point, more investors are trying to
Yeah.
add value, and a lot of the venture capital firms would say, hey, we add value by helping you with your strategy, maybe introducing you to some potential customers. But I said, hey, that is not addressing the number one success factor, which is the
Yeah.
founders.
Okay.
And so what we have at Staircase Ventures, we have what we call a founder growth platform, where
Hmm.
that's really focused on helping our founders grow and develop and act and be as successful as possible.
Yeah.
And so specifically what we do, and this was based on sort of the 8 years that I spent in Real Ventures working with many founders, is that we provide executive coaches for all of our CEOs.
Mm.
And we have peer support groups where founders can connect with others who are going through similar stages or who are a little
Yeah.
bit ahead. And what
Yeah.
I've
Yeah.
noticed is those two things can really help to accelerate the growth and development of a founder.
Okay.
But then we
Yeah.
said, hey, that's not enough to just help people. What you also need to help, not enough to help people with their development. What you also need to do is help these founders show up their best every day. And so the next three pillars of what we do are all around how can we help them show up their best every day. And so specifically, what we provide is we did a partnership with Cleveland Clinic Canada, where all of our founders have access to confidential, complimentary health, wellness coaching.
Ah, okay. Yeah.
We have personal financial advisors who will help our founders on their personal financials because often they spend so much time thinking about their business, but do they have time to think about their personal financials? And then the third thing under that is uh, family support. And so, specifically, what we do is we give all of our founders a cash stipend in the first year.
Mm-hmm.
And we say, hey, here's cash stipend. You do what you want with it. But the
Yeah.
idea is that you will use it for childcare, elder care, take your significant other or your best friend out for a fancy dinner once a month, go away for a weekend with a bunch of friends, do
Yeah.
whatever makes you happy and able to take care of the most important people in your life.
Oh, that's amazing. Yeah. And you're the only company in the universe that does that, I would guess.
Well, I don't know of any other venture capital firm that
No,
does that.
neither do
The
I.
other thing that we do that I don't know of any firm in North America that does is we share the
Yeah.
carry with our
Yeah.
founders,
I saw
which
that. Yeah. Mm.
basically means we share part of the profits from the fund with our founders.
Mm.
What this means is that our founders are incentivized to work together
Yeah.
and to help
Okay.
one another.
That's interesting. Yeah, that's right.
Right.
Okay. Hmm.
Yeah. So we have events.
Great.
So how that looks is we have things like we have a Slack channel that's very active. We have every other week, we have Friday calls with our founders. We have in-person events. They get to
Yeah.
know each other and they will support each other, introduce each other to things, share their learnings, share if
Hmm.
somebody's looking to hire a particular type of person, they help each other hire the best people.
So it's a new version of the YPO kind of idea.
Yeah, I guess so. Yeah. And now I don't know if YPO has profit. I don't know if they have profit
Oh,
sharing,
no, they
but
don't. But I mean, the common shared interest in introducing each other to potential business. Yeah.
exactly. And then
And
the
learning
third,
and
yeah,
mutual learning. Yeah. Okay.
the
Yeah.
third thing that we do is we have a great group of advisors who have launched and built very successful companies. These
Okay.
advisors come from different functional areas, different industries, and are located across North America.
Right. Okay.
And these folks are extremely helpful for our portfolio companies.
And they do this for free? Is this pro bono or are they compensated for their advisory services?
So they get part of the carry as well.
Oh, they do. Okay. So it's all on the come.
Yeah.
So, Staircase now has how many investments?
We now have 16 investments.
1/6. Wow. How do you keep up with that every day? How many people have you got helping you?
So we have two people on our team, full-time people. We have an operating partner, and then I've got an
Yeah.
executive assistant who keeps everything organized for me.
Wow.
But I think we're very organized. One of the things that I have learned is to invest in our portfolio in the first 3 months.
Hmm.
So in the first 3 months after we invest, we spend a lot of time with the company, helping them get the right KPI tracking, the right financial model,
Yeah.
the right team, understanding how to run board meetings. And if you invest that time up front, helping get them on the right track, it ends up
Yeah.
saving time down the road.
Hmm. That's great. And what's your time horizon for these investments in your own Staircase mind?
So the fund is structured for to be 10 years,
Oh, it is.
plus an
Okay.
opportunity to extend it to by an additional 2 years.
Okay. And would most of your exits be by sales to other VC companies as scaling up?
No, so it's interesting. In private equity, the way a lot of private equity
Hmm.
companies exit.
Yep.
In venture capital, it could be that way, but a lot will also be via M&A or IPO.
Okay. Oh, it will, eh? How many? Oh, really? I didn't know that. So that goes on the Venture Exchange and the Toronto Stock Exchange, for example, or does it go NASDAQ?
So it depends.
Yeah.
So yeah, it depends on the company.
Hmm.
So um, companies like Xanadu is a recent quantum computing company that went public.
Hmm.
That was a Real Ventures portfolio company. It's in quantum computing. We have another couple of Real Ventures portfolio companies that I was involved in that are getting ready to go public. Often they list on both index on both exchanges.
Yeah. Interesting. Okay. So when you come to think about a board of directors, a board of directors does two things. One, makes sure that management isn't stealing too much. That's number one, the policing function. And then number two, adds value to the ongoing corporation. And the McKinsey book on the 67 most successful CEOs in the world, God knows how they chose them, but they came up with 67. When they talked about the cognitive biases with respect to various functions, with respect to the board of directors, the cognitive bias of these 67 leading CEOs was, my job is to help the board help me and my team. And in a way, you're already doing that. So do you need a board of directors for your startups, or are you already adding that value yourself through Staircase?
So it's fascinating. First of all, I will say yes. In almost every case that we make an investment, we sit on the board
Yeah.
uh, because we believe that that's good governance. We're there to help the companies. But in terms of the philosophy, and ultimately we are there
Hmm.
representing the investors in the company and doing that's our fiduciary duty. I think a big part of that, particularly at the early stage, is helping the company be successful.
Yeah.
And that happens not just in the boardroom, but for a lot of
Yeah.
a lot of our portfolio companies, I'm talking
Yeah.
to the CEO every week. Uh,
Right. Yeah. Yeah.
but I do think, like I say to the CEOs of our companies when we invest, I said, your responsibility is to build a very successful company. You need to leverage all of the resources that you have around you to be successful, and that includes your board.
Hmm.
And if you get to the point where you ever feel that the amount of work that you're doing preparing for the board
Yeah.
is
Good
not
for you.
rewarded
Yep.
by the
Yep.
value that you
Yep.
get out of the board,
Yep.
then we need to talk.
Yeah. Okay, that's great. I never ask the question, how did you spend your time as a board? I always ask the question, how did you invest your time on the board, assuming that that puts you in the mindset of looking for a return on that investment. I think that's a great metric. Of,
Yes,
yeah,
absolutely.
that's
And I
great.
say, I mean, these founders, they've got a CEOs, they've got a lot of work to do in
Yep.
driving the business. The
Yeah,
board needs to be a value add.
exactly. No, 100%. And how many of them are, in your experience, say, in other companies and looking around when you ran eBay and Kijiji?
So it's hard for me to sort of, I do, that being said, I think when you get into a large public company,
Yeah.
that dynamic may change,
Oh, for sure. No, it gets much more
right?
formalized. Yeah, sure.
It's much more
Yeah.
formalized, right? But
Yeah.
I think for the earlier stage companies, I hope in most cases, we are adding value. I do find though, as the company gets more mature,
Hmm.
the ability to have the board add value goes down.
Yeah, I think that's right. Unless potentially you go outside and get independent directors,
Yes. Yes.
which also has the virtue in it of them not being conflicted. You are still running Staircase, so you do have another fiduciary responsibility to your investors, and that might intersect with the startup probabilities of the invested company. So I always figured that having independence was an important addition, but that not many entrepreneurs. I worked with Mars with Evan Epstein from Stanford, and he started up the Stanford Startup Governance course. And
Yes.
we found there that the entrepreneurs in the Mars environment would wake up one morning and say, "Oh, yeah, this governance thing, what is it?" And then they'd be interested. But if you had a general kind of a meeting of entrepreneurs on governance, it was like, I'm not interested in that. That's not where I am. So,
Yeah.
yeah, it's a tough evolution, I think, from entrepreneurial founder, startup, small company, hopeful, and building something that's going to be more appropriate, I think, for a larger, more structured corporation.
Yes. And I think
Yeah.
it's one thing that I have coached founders through
Yeah.
is they need to go from thinking about this is my company
Yeah.
and I get to decide what happens to actually it's the investor's company.
Yeah,
And
that's right. Well, And what they
right?
typically find is after the third round, they're outvoted on the board by the investors who may not like the founder anymore, and away he or she goes. I
Yes,
think that's,
although
yeah.
I have found that that is is I shouldn't say is relatively rare, but it's not the mode of operating, the general mode. If
Okay.
you look at the successful tech companies,
Hmm.
far and away, the most successful tech companies still have the original founder.
Oh, is that right? No, I didn't know
Sometimes I
that.
think I
Yeah.
might write a book on this, or
Yeah,
at least
no,
an
I think
article,
that's really interesting. Yeah.
because
Okay.
it's interesting. And having been at eBay in those formative years, when I
Yep.
was at eBay, I mean, we were bigger than Google. We looked at buying Google for perspective.
Right.
I
Ah,
mean,
Janet, missed opportunity.
we had more sales going through our platform than Amazon did. I mean,
Wow.
we were the shiny object.
Yeah,
But what
right.
happened, and I love eBay and it was great to me, but eBay failed to capitalize on its advantage.
Yeah.
It was so successful in an online marketplace. It was
Hmm.
like, oh my gosh, this is the best business model ever. We don't take inventory. We have very low costs and we're making very high margins. And
Hmm.
that, I think part of that was we lost the founder and the visionary founder at eBay.
Oh, oh, okay.
Right. So Meg came in.
Yeah.
She's, again, a lot of respect for her. She was a management consultant,
Yeah.
right? Trained,
Mhm.
classically trained in consumer packaged goods. She came in to manage the company. You compare that to companies like a Google, Facebook,
Yeah.
Amazon.
Yeah.
They had the visionary founders. And as a result, those businesses today look
Right.
very different from what they were
Yeah. When I
because of,
asked, yeah,
yeah,
when
go
I
ahead.
asked Andreessen Horowitz, arguably the most successful Silicon Valley VC PE firm ever, I asked Mark Andreessen, what would you do in a large, complex, publicly traded, widely held corporation to get them involved and moving and I guess completely committed to AI? Because that's going to change everything,
Yeah,
is his
yeah,
hypothesis. And so I asked him, "What would you do?" He said, "Oh, that's easy, David." I said, "Yeah, what is it?" He said, "I'd make the uh, I'd make the CTO the CEO. I'll teach the technology person anything he or she needs to know about running people, events, and so on. But what we got to have is we got to have that commitment, that leadership commitment in the future, which is to your point, eh? The
yeah.
founder visionary. Mm-hmm.
That's
Interesting.
right. And you need to have a founder who learns and can
Yep.
surround themselves with other people,
Yep.
which is one of the things we look for when we're making an investment. Does the person always learn? Can they attract and retain and motivate people who are more skilled than them in several areas? Right. So
Yeah.
you,
Right.
you need a bunch of different things, but
Yeah.
yeah, ultimately, I think that that's important. Now, that being said, sometimes the founder doesn't work out and you need to let that person go and bring in another CEO,
Yeah.
but it's not the preferred path.
No. And hopefully you've done enough pre-work before you made the investment to get some sense of the degree to which the CEO, founder, entrepreneur is going to work as the company gets bigger.
Yes. And
Yeah.
we would never invest in a company where we would say, like, we would never invest in something where we would say, hey, we love the business, don't
Yeah.
believe in the CEO, but, we'll invest
Yeah,
and then we'll
right.
swap out
Yeah.
the CEO.
The
Now,
person running
private
is
equity,
incompetent, but
again,
we like the idea.
yeah, like private equity is different, and that
Yeah.
might work in private equity. I would
Mhm.
argue, particularly in early stage venture, it's a strategy that rarely pays off.
Yeah. Yeah. Okay. Wow. Well, have you got any closing thoughts for our audiences before we turn it over to Quinn and the questions coming in, which I'm sure are going to be by the hundreds now?
I don't think so. I mean, I think hopefully
No.
that was helpful, and I'd love to have a discussion with folks.
All right. And are you going to be in this business longer than 5 years?
Absolutely. Well, I've made a
Yeah.
commitment to my LP, so I
That's
got at
great.
least
Yeah.
another 12 years to go.
Oh,
But
good. All right. Well, that's happy news.
yeah, honestly, I love it. I love what I do, and I feel
Yep.
extremely privileged to be able to do the work that I do, which is supporting incredible Canadian
Yeah.
entrepreneurs building their
Yeah.
businesses.
And are there lots of them out there, Janet, or do you have to scrounge and seek and hunt and peck for them?
There's lots of companies. We see a few thousand every year, but
Wow.
um, you always have to be looking for the the highest potential ones.
Yeah. And what are they looking for in their private equity VC startup partner?
I find that at the earliest stage, which I would advise founders, is the most important thing is a trusted relationship. The
Okay.
company's relationship with that early stage investor will, in most cases, last until they exit the company.
Yeah.
And
Yeah.
so, yes, you want somebody who can add value, can, introduce you to great people, open doors, etc., etc. But to me, that if you don't have that fundamental basis of mutual trust and respect,
Hmm.
then nothing else matters.
Wow. And you've built lots of mechanisms around that to reinforce that belief into reality.
Yeah,
Good for you. Oh, that's terrific.
thanks.
Quinn, what have you got there?
Just to jump on your thought related to one of the stories that David uses around maximum tension. He talks about trust, but also tension.
Mm.
And so, as a investor, an LP, and a board member that wants to see the best in your startups, to what degree do you have to really push them and sort of play with the trust that you've developed with them without burning it too much?
Yes, so I love this question. And in the because I think that some people look at Staircase Ventures and they say, "Oh, you're so nice. You mean you give all these benefits and you share your profit?" And they somehow equate that to maybe being soft or a bit of a pushover. And I
Mm.
say, actually, it's the exact opposite. And
Mm.
I was a competitive athlete. I used to like to use the athletic analogy. And if you go to an Olympic training facility, what you are going to see is you will see amazing food being prepared for the athletes. You will see physiotherapists, massage therapists. You'll see great facilities. It's not because they're there on a vacation to take it easy. It's because the expectations are extremely
Yeah.
high, I should say. The expectations are extremely high, and
Yeah.
therefore they are provided with the surroundings to help them achieve those expectations. And so what I have seen is I actually have very high expectations for my founders. And those support mechanisms are there because we know that the journey is hard. I also
Mhm.
think that it's not a matter of, hey, push and pull. It's a matter of, hey, we are on the same page. We both want this company to be successful. And I have often said to my founders, let's just say, for instance, they say, oh, yeah, we're going to double sales next year. I said, well, how can we triple sales?
Yeah,
But
that's right.
it has to come from a place of, I believe in you and I'm going to help you. And so rather than just saying, hey, you got to triple sales, I'd say, hey, how can we triple sales? Let's have a whiteboard session. Let's think of all these ideas. Let's
Mhm.
figure it out. How can I help you? And so I think as being a director, a successful director, it's about raising the expectations of what people can achieve and
Mm.
then showing them how to achieve those higher expectations and providing the support mechanisms to enable them to achieve those.
Mm. That's a very, very insightful point. Yeah. Quinn.
Um, Janet, can you share some examples of tricky governance situations you've been a part of? How did you manage them? What were the takeaways that you could share with other VCs and investors on the call?
Yes. So I think where you can have some tricky governance situations is where the interests of the board member is not aligned with the interests of the company. So I will
Yeah.
give you a classic example that I have seen. And so I'll just use some hypothetical numbers, right? But let's just say you've got a company and let's say they have raised $40 million. And then they go and they raise another $10 million. but that $10 million comes in at a 2x liquidation preference. So that 10 million, latest $10 million, they get 2x before everybody else. Then let's say the company falls on hard times and they have a potential acquirer who's willing to pay 25 million. But you know what, maybe you could negotiate, maybe get a little bit more, maybe you could go out and talk to some other investors, some other potential acquirers, maybe you could even get it up to 40 million. That investor who's going to get their 2x liquidation preference, they're like, as long as I clear my 20 million, I don't care. Because I get the first 20 million goes to that investor, and then the next 40 goes to everybody else. So unless it's going to be very high, like unless it's going to clear that stack, I don't really care if it's $1 more or 40 million more. All I care is that I get my 2x. And so that is where I have seen it play out in the boardroom, where a director will say, no, let's just sell it. Let's sell it for $20 million. I'm home. Like, they don't care. And other investors are sitting there thinking, no. We want to push for a higher amount because they don't get a penny if it goes for 20 million. And then you have the founder who's there who's saying, well, actually, what I care about is that all of my employees have a place to work. And so I want to go with this other company that's said that they will hire my team, right? And so that is one example of a tricky governance situation that can happen. And I think one of the ways to minimize that is to try to keep all of your investors a pari passu, which means, yes, you still have that difference between the preferred shares and the common shares, but if the preferred shareholders at least all have the same terms, they are aligned. So, I mean, that's just one small example, but it's very difficult. And I have seen, the true colors of a VC or any investor, frankly, it comes out in the bad situations.
Yep.
Right?
Yep. That's
right. Where an investor's true colors are shining. But the reality is that this is a long-term game, and we need to maximize the returns for our LPs, but we need to do it in a long-term way. And inevitably, the investors who push for their own short-term interests end up losing in the long run, because then they don't get invited in for deals in the future.
That's true. Yep. There is a long-term consequence that's negative for that kind of investor. It's a fairly small world you live in, so word travels. Yeah.
Exactly.
Reputation precedes you. That's true.
Exactly.
Thanks for the question, Olivia.
Yeah.
Thanks for the answer, Janet. Yes. From Brian. So I'm going to preface this by maybe if you'd like to talk about the C100 and what that organization is about, but I'll read Brian's question. So in this world of seed or early stage VC rounds of $100 million or more in Silicon Valley, when seed at times used to be $250,000, how do Canadians compete since we don't have the depth of capital? And maybe I want to add onto his question, the technology that's being created in Silicon Valley as well, with this new, as David says, fourth industrial revolution that's happening with artificial intelligence.
Yes. So thank you very much for the question. I mean, there's so many different layers to that. There are different directions I can go. First of all, I would say Canada has amazing researchers and amazing talent. Our challenge is twofold. One is keeping those people in Canada, and the second is commercializing the research. So, and again, we could go down that path. The latest news report I read, for instance, is that 78% of Waterloo computer science engineers, upon graduation, they moved to the Valley.
78%.
Yes.
Whoa.
Which is a whole situation. And I'll just say as an aside, I think that the Ontario government should be stepping in and saying, we are not going to pay to educate students. A lot of Canadians too. Right? We're not going to pay to educate Canadians who are then going to use their education and go and work in the States for American companies. Like,
Don't run
Why
for
the
Parliament
government
on
has
that one.
not yet closed that loophole is beyond me. But anyways, that's another issue. Um, so I think the other point I will say is those large $100 million seed rounds, they're the ones that get the headlines. They are still the exception.
Yeah.
There were 1.3 million AI companies that were founded in the last 2 years. 1.3 million, right, in North
Really?
America.
Yeah.
So yes, you hear about these massive fundraising rounds. They are in the like they are a tiny percentage.
Yeah.
So just keep that in mind. And I think the funding environment continues to be very much a have and a have not environment.
Hmm.
If you look at the dollars that have been raised within the by companies, VC dollars that have been raised in the last year, the vast majority is going to a handful of companies. So,
I see. Yeah.
but I think getting to the Canadian story, I am optimistic about the Canadian ecosystem. Typically, companies in Canada are raising their seed round from Canadian firms, although that's not always the case. And certainly, tenured teams that are well known are raising rounds from the US. For instance, I just led a round into a company. It hasn't been announced yet. It was a spinoff from Vector. We co-led the round with a Silicon Valley-based venture capital firm. So, plus there were some very high profile angels from the Valley who also invested in it. This is a Canadian company. They have no plans to ever move to the US.
Yeah.
So
Hmm.
I do think one of the rhetorics too that I have heard too many times that I just do not see to be true is that US venture capital firms require that Canadian companies relocate to the Valley in order to get funding. I have not seen that. I've never
Hmm.
seen that.
Hmm.
I mean, I've heard once or twice, but I mean, that is something that maybe happened 15 years ago. Today, they will say you need to hire somebody in the valley. You may have to hire some technical people in the valley. You may need to hire like a head of sales in the valley. But they do not, in fact, what I have seen is the reverse is because we lead in the seed round and then typically work with other companies who come in and lead at the Series A. US investors, I'm always talking to US investors, and they say the same thing. We want to do more investing in Canada. We want
Hmm.
to do more investing in Canada because Canada's got great talent. They've got they're building great businesses. They're building global businesses from day one. And they say, imagine a Silicon Valley based startup that's trying to hire an engineer for a top engineer is competing against OpenAI and
Hmm.
Google and
Hmm.
Anthropic, who are willing to pay, in some cases, close to $1 million a year for the best talent. Like the startups, they just can't compete. And
Hmm.
another thing, I was talking to a founder earlier today who's a Canadian. He's living in New York. He's lived in the States his whole life. He's starting a tech company and US investors. He's had two US investors who said, "You're Canadian. I suggest you move back to Canada and build your business there."
Wow. That's
And
Wow.
that's the
yeah.
narrative that people don't talk about, right? I get concerned about Canadians. We're so hard on ourselves. Um, but we
Huh.
need to realize that this can be a great place. Yes, it's not perfect. Yes, we need to spend time in the valley. Absolutely.
Hmm.
Canadians need to spend time in the valley in order to understand what's going on there. They need to absolutely, they need to spend time there, but it doesn't mean that they need to relocate there.
Interesting. I'm on the board of one private equity company that's headquartered in New Hampshire. And I said to the CEO, Bob, how do you get anybody to come and join us in New Hampshire, for goodness sake? And he said, David, that's the easiest sell I've ever had. They can buy a home here on 5 acres of land for the same price it'll cost them for a one-room flat in San Francisco. They have great educational opportunities for their kids for free that are public. And, we're living in a nice rural environment where we can relax and run and do whatever we want to do. He said, I've never had a problem hiring anybody out of Silicon Valley to come to New Hampshire. I thought, well, okay. So maybe Canada's the same, right? Never had a problem getting them to
Yeah, I
come.
mean, it is, I will say, it's hard to get people to move from Silicon Valley to Canada,
It
but
is. Yeah.
yeah, it is. But they can work for a Canadian company and still be located in the valley.
Yeah. Yeah. Yeah.
Can we with your venture capital hat on, but you also serve on a publicly traded board on smart centers. And so let's talk about the job that you have informing, supporting strategy for entrepreneurs, for the teams that you invest in, and how that might apply to directors who work for much larger publicly traded boards. And within that context, what needs to happen, or what are the opportunities for larger boards to put their hands on the scales of strategic growth in businesses?
Mm.
So, I mean, I think from my saying is that there's a opportunity for members of boards of publicly traded companies to add value on the strategy if they have specific expertise and they understand the business. From my very limited perspective, I find, and what I've heard from other folks is that a lot of public board governance is is sort of governance, I guess, for lack of a better word. It's looking back. It's making
Yep.
sure that the checks and balances, it's risk. And I think there's an opportunity to leverage the board to think about AI and going forward. And there's an opportunity to provide that perspective and to help the company in that way.
Mm. Yeah, when I was McKinsey's global governance advisor, we did a survey in the States and against three lines of sight: hindsight, which is what you say, oversight, looking down, and foresight. And when we asked people just identify how you're investing your time today, 60% said that on the board I'm on, we're spending 60% of our time on hindsight. So then I asked them, how should you be investing your time in a perfect world? And they, of course, they flipped the answer. We should be investing 60% of our time and worrying about the future.
Exactly.
Yeah. So I think your instinct there about where time is being invested today versus where should it be invested tomorrow is quite right.
And I think boards can provide a very unique perspective because
Absolutely.
they have that higher level perspective, right? Versus and they
Yeah.
see across multiple companies. And so I think that's a very important role.
Maybe so we're just up on the hour. One more question from the perspective of an executive or a startup founder. So what have you seen early stage entrepreneurs or C-suite members use boards? How have they best used their boards, or not? You might have come across great entrepreneurs who have totally under leveraged their board and have gone on to be successful, perhaps too.
I think that they use the boards as a thought partner and to bounce ideas around.
Mhm.
And as, yeah, as a trusted, respected thought partner, and recognize that the board member is there as their partner and has a different perspective that could be
Yeah.
useful and is not there in a judgment role.
In
One of
our
the
prep call, you said that you have to make sure that the entrepreneur's time was extremely well used and it was a valuable experience for them in any of the
Exactly.
board meetings.
Exactly.
On the Globe magazine article, you listed Geotab as one of the companies that you think is a Canadian hero. No
Yeah.
question about it. But did you know that what Neil has now done? He's drawn a moat around his large language model, which Google did for him. And then he put in everything he'd ever done as an entrepreneur, everything he'd ever written since 2004, and every quarterly statement since 2004 into the model. And then he said, I need a plan for the next 2 years. It came out, he edited it, went to his advisory board. They said, Neil, this is the best plan we've ever seen. But what he's done now, he's made that model now accessible to his outside advisory board members as well as all of the senior executives. So we're all playing now on the same kind of information field, which takes away the fundamental information asymmetry on typical boards. And that's going to, I don't know what's going to happen when every board that's publicly traded and widely held has complete access to everything ever done within the company before. Because you can then say, what are our 3 main marketing problems? I don't have to worry for the marketing executive to send me the deck a week before the meeting. I can already ask my model. It's going to be extraordinary, that revolution, I think.
Yes, I think it'll be interesting. I think it takes, I mean, good for Neil, and I think it takes a lot of courage
Yeah,
uh, for a founder to do that.
yeah, I agree. Very courageous man. Okay,
Um,
Quinn, we're at the hour.
all right, Janet. Where can people connect with you? Where can they find you?
Best is to just email me. It's janet@staircaseventures.com, and I'd be delighted to hear from anybody.
Oh, that's super.
Janet's prolific with the amount of online content. As a marketer, kudos. Thank you for getting loud about the
Yeah,
Canadian
right.
venture ecosystem. Thank you very much for that.
Yeah, thanks
Thanks
so
so
much, Janet. It's great to have you. Very
Great
precious
And
to be
time.
here. Thank you
Yeah.
so much.
Okay.
and
Okay,
I'm
Thanks
just
bye.
gonna
everybody for signing in today.
quick share of the next event. So we're gonna go on a bit of a break until September 14th. We're gonna have Rob Pritchard, the chair of Tories, and many other boards coming in to speak about his experience. We have Neil Cause, who David was just talking about, from the founder and CEO perspective of an extremely large tech company here in Ontario, talking about AI, talking about governance from the founder and CEO's position. And then we have Connor Kehoe in November. He is David. Maybe you could speak to his experience for a second there.
Well, he's been McKinsey's senior governance partner for decades and is now trying to work on a system of ES&G measurements that can become rather like the accounting standards. They're absolute and everybody will report against them. And that's what he's doing at the UNPRI. Hugely complex, incredibly detailed. 75 members on the UNPRI board. I don't know how he survives, but he's making progress, he says. We'll see.
So that will be governance thought leadership around ESG and
Yep.
reporting. It's going to be
Yep.
great. And we've released a board compass book. There's a new one in the works. There's a couple in the works, but we'll be doing a presentation on how David does board evaluations. So we want to hear from you if you have any board evaluations coming up. You're curious about how to get better at setting up your board evaluation. Please reach out. We have a book release and we'll be doing this presentation at the end of the year.
Great.
Thanks for coming.
Thanks, Quinn. Thanks, everybody. Bye for now.